Progress invoicing, a modern approach to project billing. Progress invoicing represents a sophisticated billing method where clients are charged incrementally as project milestones are completed rather than in one lump sum. This approach has become essential in industries with extended project timelines, such as construction, manufacturing, and creative services, by breaking down large contracts into manageable financial segments. Progress invoicing addresses critical cash flow challenges for service providers and clients. This presentation explores how implementing this billing strategy can transform your project management process, enhance client relationships, and optimize your business's financial stability. Why use progress? Invoicing, steady cash flow, maintains reliable revenue streams throughout the project duration, reduced financial risk, minimizes exposure on large-scale, lengthy projects, enhanced transparency builds client trust through clear billing practices, payment work, alignment, ensures compensation, matches completed deliverables. Progress invoicing creates a win-win scenario where service providers receive regular income to support ongoing operations while clients benefit from a more manageable payment schedule. This approach particularly benefits small businesses and freelancers who might otherwise struggle with extended periods without revenue on major projects. The progress invoicing process: define payment schedule, establish contractual milestones or percentage-based payment terms, assess completion, evaluate work against predefined milestones, issue invoice, create a detailed breakdown of completed work, obtain approval, secure client sign-off on the completed portion. Effective progress invoicing requires meticulous documentation and clear communication. Each invoice should include previous amounts billed, current billing, and the remaining contract balance to maintain complete transparency. This approach transforms invoicing from a simple transaction into an integrated project management tool that informs all stakeholders about financial and completion status. Real-world applications and examples: industry invoicing method. Example: construction, AIA G702/G703. Forms foundation 25%, framing 25%, finishing 40%, final 10%. IT services, sprint completion, monthly billing based on development sprints, delivered manufacturing phase, completion design 20%, materials 30%, production 40%, testing 10%, creative services, deliverable based concept 25%, draft 25%, revisions 25%, final 25%. Consider a $1 million construction project with 4 milestone payments. When the foundation is completed, a $250,000 progress invoice is issued, representing 25% of the total contract. This approach scales effectively across industries while adapting to their specific needs and standard practices. Best practices and key considerations: business excellence, achieve optimal project financial management, stakeholder communication, maintain regular updates with all parties, software integration, utilize accounting tools with progress features, documentation and contracts, define clear terms and maintain detailed records. Successful implementation of progress invoicing begins with clearly defined contract terms that specify exactly what constitutes a billable milestone. Supporting this foundation with robust documentation practices and appropriate accounting software creates a seamless billing process. Regular client communication remains essential throughout, ensuring everyone understands the relationship between completed work and issued invoices.